Hi everyone, I'm shooting this video on 22nd June, Sunday, and you probably also, just like me, woke up to this tweet from Mr. Trump that 3 nuclear sites in Iran have been decimated by US bombs today. Welcome to the hottest topic right now in the world, trade wars. I know this is not my wallpaper, but a place where I would love to live, probably you also. If we, however, count the number of people who are not interested in peace and who would rather have wars globally, probably we'll count 100 and by then we will exhaust the count. Rest 8 billion people in the world would love to have a peaceful planet. The rest 100 people have vested interest in politics, control, and extreme capitalism. They govern the lives of remaining 8 billion people in the world. And note that the wars which are going on right now in the world, some of them are between alliances and country. For example, the NATO versus Russia, country versus country, in some ways India and Pakistan, though it is not a continuous war. A lot of countries are fighting civil wars right now. And in my opinion, every war nearly is eventually about direct or indirect trade war in some way. It is funded maybe, but it is all about capitalism. There are about 50 countries right now who are not stable, but the key wars which are going on, newest one, Israel versus Iran, Israel versus Palestine, Russia, Ukraine, India, Pakistan. China versus Taiwan is not a ongoing conflict. However, Taiwan is being threatened by China all the time. Then there are civil wars like the ones in Sudan, Myanmar, Bangladesh, Syria, Yemen. There's a pattern here and I'll talk about it very soon. One thing to notice, most of the global trade actually happens via sea. While it takes a lot more time via sea, it is not very economical to use a aircraft to carry goods. This particular graph is courtesy Resource Watch and shows the maritime traffic across the globe. There is heavy traffic between China and West America. Then, though this line seems small, there is a lot of traffic that goes from Indonesia towards Europe via what is called Suez Canal. And then there is a lot of traffic between the east coast of United States and Europe. This traffic, by the way, also goes towards Southeast Asia. Very little traffic that goes to South America. Very little traffic that goes to South Africa. Literally no traffic below this line, which is Antarctica. No traffic above Russia. This is the graph that most of you would have seen a lot. China, India, Russia, Europe, Africa, Middle East. Now North America is here, United States, Canada, Mexico. And then the entire South America, including Brazil, Argentina, Venezuela is here. Indian Ocean is way bigger than what most of us would think. This bottom part is Antarctica, all ice. If we move to North Pacific Ocean, which is right of Japan, left of United States, nearly half the globe is vacant here, water. If you go to the top part of the world, see this is the United States part. If I go towards the top part, here we have Europe, Russia, Africa, United States, and Greenland is really at the top of the world. But this part again is completely frozen, which means ships can't navigate through it at all. Note here we have Sudan, Yemen, and Syria. The conflicts I talked about earlier, Bangladesh, Myanmar. Here is a subjective opinion. Most of the wars going on in the world right now, they are about winning a otherwise losing battle, a battle that the country or the party or the leader was not going to win otherwise. It could be to get political control of natural resources, pricing power, for example, crude prices, a preference in trade, and we'll talk about some examples, regional security, for example, nuclear threats from some countries, eliminate those threats if required by large countries which have a big say. What we'll talk about in today's video, the high volume exports and imports, the key ones being oil, coal, steel, and IT. Top 5 trade routes. This is very important because this will help you identify future opportunities to make money or prevent losing money. There are 2 specific case studies I want to talk about, one of Istanbul and St. Petersburg in Russia, and how you can make money in trade wars. Top 5 inputs from my side. Let's start by talking about imports and exports. China is the largest exporter in the world, $3.4 trillion worth of goods. United States is the second one, $2 trillion. Germany actually is not far behind United States, $1.69 trillion. Now you might be wondering, what is Germany exporting? So there is a lot of technology owned by, say, Germany, even Japan, for example, $717 billion, like Sony, Panasonic, Honda, Toyota. These brands are owned by the companies and the factories may not be in the country. For example, Pepsi, Coca-Cola, they might be manufacturing in India, doing business in India, but their parent will earn the money or a part of money. This is India in the Asian pie, $432 billion. Now, what is being exported? China dominates the global exports: electronics, machinery, textiles, and steel. United States, this does not list IT for some reasons, but aerospace products, automobiles, pharma, and agricultural goods. These are the end companies. The pharma companies could be getting contract manufacturing done, say, in India, but the companies are American. Even the generics companies in India, they are suppliers to these pharma giants. Germany, automobiles like Mercedes-Benz, machinery, chemicals. Japan, vehicles like Toyota, Honda, Nissan, and so on, electronics, Sony, Panasonic, etc. South Korea, electronics, LG, Samsung are the prominent names. Vehicles, Hyundai, for example. Now note that not all of these exports require usage of ships or aircrafts. A lot of this is assembly in the local country. For example, automobiles like cars are not typically exported as a finished product, but the eventual money is recognized with the country that owns the brand. For example, Mercedes with Germany, Ford with America, Honda and Toyota are associated with Japan. And then brands like Tata Motors, they are associated with India. Even JLR is associated with India now. One good that is exported a lot in physical shape is oil. You have to mine oil where it is available and you have to ship it where it has to be consumed. We have all heard about Saudi Arabia being one of the largest producers of crude oil. Many of us may not know that Venezuela has the largest oil reserves. That is why I showed you Venezuela in the map. And it is among the poorest countries right now. And it is among the countries with highest inflation in the world. Decimated, destroyed in last decade or two. Any guesses why? Then third is Canada, followed by Iran. Do you see any coincidence between Iran being destroyed right now and Iraq, which was destroyed about 2 decades back? See, this is Venezuela. Look at the size. And we usually talk about companies like, say, Saudi Aramco, who produce, ONGC, which is again an E&P company, Oil India. And then we talk about refineries like Reliance, IOC, and so on. There are companies like Petronet LNG in India, which also deal with shipping of, say, gas from Qatar to India, the Dahej port in Gujarat. So these are again important players in the ecosystem. Just remember that part. Now earlier we talked about the reserves part. Now we are talking about the exporters here. Do you see Venezuela anywhere? No. Saudi Arabia at number 1. Russia at number 2. Then Canada, United States, which was not even in the top 5 list of reserves. Iraq, UAE. See, UAE is just this particular small part. Kuwait, it's here, small part. Norway, many of you may not even know where Norway is here. Nigeria, Kazakhstan. This is why a lot of people are after Russia's life. Russia is exporting $51 billion worth of crude to China, then to India. And a lot of this is actually not in USD. This is one of the biggest problems US has with Russia. One important element of the oil and gas cycle is oil refining capacity. We know about Reliance. We know about Indian Oil. For example, they have a big refinery in Panipat and so on. India is at number 4, approximately 6,000 barrels per day capacity. The largest capacity is with United States, which is also the largest consumer of crude oil. China, nearly same. Then Russia, 6,821, larger than India. This, in my opinion, is a missed opportunity. While we sing a lot of songs about the Jamnagar refinery, which is fantastic, but we haven't done beyond that in the last decade or so. The next big commodity which is exported, imported a lot in very high volumes globally is coal. This is a statistic that many people would not be aware of. I was not aware of before I created this video, that United States has the largest coal reserves in the world. And this is not the most astonishing part. I'll come to the next one very soon. Russia is the second one, followed by Australia, China, and then India. India, if this factor is 96, US, the reserves are 220, nearly 2.5 times of India. Then you have Indonesia, which is less than India, a factor of 1 is to 4. And I'll tell you why I'm talking about Indonesia here. It is the largest coal exporter in the world right now, followed by Australia, then Russia, and United States. United States tells everyone to go for towards clean energy, but they are exporting coal. So whom do they export it to? They export it to India, then Japan, Netherlands, Brazil, and China, which has coal reserves. Who does Indonesia export to? China, India are the largest importers, though they have coal reserves also. So, what is happening here? By the way, in Indian context, Tata Power owns a lot of mines in Indonesia and they import coal from Indonesia because Coal India, which is a local manufacturer, is not able to provide them the coal they require to run their plants. Similarly, a lot of coal from Australia is being imported by Adani Enterprises. They may be involved with United States also, I'm not aware. But if you see any problem in the coal ecosystem with respect to global prices and all, you know what kind of impact it will have, say, in India, China, and so on now. Now, what is happening in China and India? Why are we importing coal in India and China? See, in India, one fact is that Coal India has not been able to scale, and I'll talk about that with data. What is happening in China is, if you see, China is a large country, but significant part of China, right from center to northwest, a lot of this is arid land. So they have set up a significant solar farm in this particular area, producing humongous amount of solar power, and they are scaling it like anything. India also started by utilizing a bit of Rajasthan, but India's arid land is not as much as China. So what India did was it consumed the most fertile land in the Deccan Plateau and started creating solar farms here. So China will not need so much coal. As a result, it is not spending time in developing coal mines. This is Indonesia and this is China, not very far off. While this line seems tall, 600, 622, 700, 773, 781. If you scale it from zero, this line was literally flat in terms of coal production growth, in terms of Coal India. I have no idea what their leadership is doing and why government is okay with that. Even their projected numbers till 34, 35 are paltry 8%. They don't even have an aspiration to grow faster than the economy. India is saying that it will grow at 7, 8, 10%. Coal India says will not even grow at that pace. This is the stock price of Coal India. Just as a disclaimer, I have exited most of my Coal India positions at a loss as of last week. Let's jump next to steel or iron ore. Steel is iron ore plus carbon plus some more stuff. We can use these terms interchangeably. Who has the largest production happening right now? China, India, Japan, United States, Russia. These are the top 5. This graph is slightly more clearer because in this football, China is way, way, way bigger than everyone else. The reserves are with Australia, Brazil. They are not doing much with their reserves right now. The top global exporters by volume are China, Japan, South Korea, Germany, and Russia. My understanding here is that Japan here owns certain steel mines which are not in Japan. Probably same with South Korea. Just like Tata Steel owns Chorus. Next, let's talk about IT and trade wars. Note that IT is special because there is no tangible product which is to be shipped here. Most of IT today is done over wires over the internet. This is the heat map for Nasdaq, largest companies being Microsoft, Nvidia, Apple, Amazon, Google, Meta. Broadcom also is related to IT only. Most of these large companies, even Planeteer, Tesla uses a lot of technology. A lot of these are IT companies, even Netflix. These are SaaS or direct IT companies. If we go to China, we have Tencent, which is literally half of China's stock market. This is Hang Seng's tech index, Alibaba, Xiaomi, Baidu, and so on. Have you seen these brands globally these days? Probably no. That is why I'm saying trade wars. Many of these companies are doing business or they were doing business. For example, Xiaomi is there in the world. However, it has suddenly gone silent. Alibaba, you don't see much outside China. Baidu is always in the danger of being banned in many countries. Trade wars, very applicable to IT, especially to protect domestic companies. Amazon will be threatened a lot if Alibaba was allowed to do significant business, say in the United States. Coming to India, the IT companies in the Nifty, mostly like say for example TCS, then we have Infosys, they are services companies. They are not product companies. There are certain product companies or IT SaaS companies also, the largest one being Zomato, but they are not very large in size. Besides Zomato, no one is even 1 lakh crore in size. These are mostly compared to global giants in startup phase only. Many of them are not even doing very well right now. So in some ways, United States has always tried to dominate the IT landscape. The services companies are still global, but they service the giants in United States to a very large extent. And whichever company is trying to come up in a large way, they are being crushed via trade wars to a large extent. There is a crypto trade war going on as well, and this is right now getting murkier, especially after Mr. Musk moving out. It is unclear what United States stand would be on crypto, because Mr. Trump does not even keep a laptop on his desk. He is not very comfortable with these new technologies, and he has not ever minced his words around it. Initially, China did not support crypto, but China is opening up now. India has put an impossible kind of tax barrier around crypto, and right now India has no plans to reverse that stand at all. In the next section, I'll talk about the top 5 trade routes. These are very important to understand because the slightest disruption in these trade routes can create havoc in the commodity and stock markets, which is very important to investors and traders to understand the impact. For example, what will happen on Monday when the markets open in commodities and equity because of the bombing in Iran? Just an example. Let me start with the map of Europe. See, this is United Kingdom, and below it is the key countries of Europe: France, Germany, Spain. Then you have Netherlands. Above that, Denmark. This particular area between United Kingdom, France, Belgium, Netherlands, this is called English Channel. Now, why is it important? See, these are the first world countries or the developed nations. They consume a lot. They have money. They import a lot, right from oil, gas to finished products. Where do they import it from? Southeast Asia, which is China, India, Malaysia, Indonesia, and so on. They import from United States, Canada. So a lot of ships pass through this particular area. They could go above also, but like I said earlier, the area above United Kingdom, Norway, Sweden, this is frozen. If you are sending stuff from Southeast Asia towards say France, UK, there is only one option. You come from the Mediterranean Sea and you go here. France, Spain, Ireland, remaining United Kingdom, Netherlands, Norway, Sweden. Everything has to go from this English Channel only. As per the World Economic Forum, it is the busiest ocean shipping lane in the world. More than 500 vessels go through every single day from North Sea to Atlantic and from UK to continental Europe and vice versa. There are 170 ports and harbors in this small area. 170. This particular channel also has a problem with weather, fog, storms. Area above is not even navigable at all. This is the only option. 1.4 billion tons is the cargo that goes through this channel every year. What happens if this particular channel is disrupted? The goods from Mediterranean Sea will not reach Spain, France, Belgium, United Kingdom, Netherlands, Denmark, Germany, Norway. See, Germany, this is the part which is exposed to sea. Remaining part is inland. Poland, Finland. If there is stuff that you are getting from say Russia, it comes like this. The same route on the reverse. You won't get stuff from Russia to many countries like say Italy, Spain, Greece, Croatia, Portugal if this channel was not available. Since this channel is completely inside Europe, you would have never heard anything about a conflict here, any war, any bombing, nothing. Next is the Strait of Malacca. It is a very interesting area that's between Indonesia and Malaysia. It is very, very critical. I would say more critical than English Channel in general for the entire world. So located between Sumatra Island and Indonesia, Malay Peninsula, 30% of all traded goods globally go through this route. 94,000 ships pass through every year Hot zone for piracy because of the narrow points. It stretches 1.7 miles in the narrowest part, susceptible to choking and congestion. This particular part is Malacca Strait. Why is it important? Traffic from Japan, most of China, Taiwan, Philippines, Australia, Indonesia, Malaysia, if it has to go towards India and Europe, there are very few options. This across Malacca Strait is the cheapest or fastest or smallest route. Yes, you could go below also, like this. Australia definitely would go like this only, but remaining people will have to travel a lot more. As soon as you come out of Malacca Strait, you enter India's jurisdiction. See, this Andaman Nicobar goes on till here. If there is a conflict, then India can put a problem for the ships going through the Indian territory. If ships were to avoid it, they will have to take a lot longer route via Maldives. Now let's look at one more element of it, which also explains a lot of conflict going on in the Indian subcontinent. See, China has a reasonably long sea boundary here. However, it has to travel a lot to reach Bay of Bengal. What do they do if they have to cut this down? They have to come down from land. What are the options? Myanmar, which is going through a civil war. Bangladesh, which is going through a civil war. Now, obviously, Bangladesh you can't reach unless you cross India. That is why they have a lot of interest in the northeast part of India. They can then avoid going through this entire thing and have access to sea directly from here. The weakest point for India is this particular point, which is also called Chicken's Neck. Nepal, Bangladesh, not in India's jurisdiction, and a very small stretch here. The third one, Suez Canal, though it is not number one or two, but it is the route with maximum conflicts in the world. The Suez Canal is in Egypt, and Egypt is a part of Middle East. Many people are not aware of this. I think it is the shortest maritime route from Europe to Asia. It was created somewhere around 1850. So more than 175 years, and we have not tried to increase the capacity of this route. See here, 1869. 20,000 vessels passing through it annually. The problem with Suez Canal is it is so thin. There was, remember, 2 years back, a ship which was caught slightly in a angular way, and it disrupted global trade for months. So entire traffic which comes from China, Australia, Japan, from India, even from some parts of Middle East which do not have any other ports, that accumulates in what is called Gulf of Aden. Now note the countries which are around it, Somalia and Yemen. You would have heard of pirates from both of these countries looting or hijacking ships a lot. This is a sensitive area. Then Sudan, till this particular point it is all Egypt. Then you have Israel. Now I have zoomed inside it. Once you are inside the Red Sea, see this Suez, this small thread of water ending into Port Said, this is the Suez Canal. This is the boundary or jurisdiction of Egypt. What is immediately after that? You have Israel. Now it may give you some pointers why there are so many conflicts around Israel, Jordan, Syria and Iraq. Palestine, including West Bank, is somewhere inside this particular zone. So what would happen if this thread of a canal chokes? The ships which are going through this particular zone, they will have to take a detour from South Africa till here, and then either come inside or continue their journey upwards or go to United States from here. It's gonna be a really long journey. One question which may come to your mind right now is, if it is so important, then if we could create a route in 1850s, why can't we create more Suez Canal 1, 2, 3 here? Your guess is as good as mine why we are not trying to reduce the risk and uncertainty. Next is Strait of Hormuz. This you have to see in conjunction with Suez Canal in some ways. This particular point right at the tip of UAE, on the other side of it is Iran. It is wedged between Iran and Oman and links the Persian Gulf with the Gulf of Oman and Arabian Sea. This is very important for the world because a lot of oil, and not just oil, actually a lot of most of the global gas which is produced in this particular area around Qatar, Bahrain, Kuwait, all that has only one outlet. There is no other option. See, this is Saudi Arabia. If you see oil fields, most of them are on the right side, not on the left side. Yes, they have created pipelines, oil pipelines, natural gas pipelines to transport what is being mined here to the Red Sea. Yes, it is done. But how much? Also, this is Saudi Arabia. Remember, there is Qatar, Bahrain, Kuwait, Iraq, Iran. They all also need seaports. This has to go via sea. So if Iran starts throwing some sort of missiles in this particular area, the entire Gulf is cut, gas as well as crude. Saudi Arabia could continue part of its business via the Red Sea, but Bahrain, Qatar, Kuwait, Iraq, everyone is stranded. This is the particular point I'm talking about. Note that here you have UAE including Dubai as one of the Emirates. You would see UAE, Saudi Arabia, they always stay out of all conflicts. They can't afford a single missile to come on their multi-billion or trillion-dollar infrastructure. There have been a lot of news about this Strait of Hormuz from Iran. Can Iran use this naval mines in war against US and Israel? If something happens, then $100 for oil. So if Iran does something there, you know what is going up or down. This can create a lot of problem. If crude goes up, then it impacts a lot more other things in terms of prices. Stock prices, commodity prices, finished good prices, and so on. One more trade route called Panama Canal, which you have to go from United States, the east coast to the west coast. You go from Mexico here, this is Panama Canal. If you were not to do this, you would have to go this entire distance. Can we go from north? Not really. This is all frozen zone. You can't. Distance would be high in any case. If you see, while there are a lot of water bodies around, the route available for navigation is actually very, very small and limited only. There is no other connectivity. Again brings in the question why no one has attempted to broaden these particular canals or increase the number of canals available. And remember, there is a Venezuela here with the largest crude oil reserves in the world. I'll talk about two specific locations, Istanbul followed by St. Petersburg. These are of very strategic importance and I'll explain why. When we're talking about Suez Canal, we saw that there was a Red Sea, there was a Mediterranean Sea, and then there was this Suez Canal which allowed you to navigate through it, get out of Europe in this manner. Now, there are few more water bodies here. The Black Sea is the prominent one. See here, Ukraine at the boundary. This particular boundary is Russia. Another prominent country which has significant presence in Black Sea is Turkey, which is also exposed to Mediterranean Sea. Now, why is Istanbul important? In this entire Black Sea, there is only one outlet to the outside world via water, and that is via Istanbul. This is the only water body that lets you come out of the Black Sea. And remember that Turkey extends till here. So this particular small piece of water which Istanbul has, that allows Turkey to control the entire trade traffic across Black Sea. Now Ukraine, Romania, Bulgaria, this particular portion of Russia, Georgia, they don't have any other option. They can only navigate via Istanbul. This particular port in Russia is very important in terms of trade volumes. So even Russia needs access to Black Sea and Istanbul. Now note that one of the largest traffic from Russia, especially oil and gas, goes via St. Petersburg. This port is below Finland. This is Gulf of Finland. So Russia sends a lot of gas and oil via this particular area. So how would the goods sent via these particular points reach the remaining world? They will travel here via Denmark, they will come out, and here we are at the English Channel. Since this is the source of gas and crude oil for Europe, most of the Europe will not ever attack Russia from these points. Now, what interest does have Russia have in Ukraine? A smaller one, of course, is access to Black Sea, but they already have it. Ukraine has a lot of resources which Russia also has, but Ukraine separates Russia from a lot of Europe right now. Belarus is an ally of Russia. If Ukraine is a part of Russia or becomes an ally, then they have direct access to a lot of NATO countries. Now, these are the top trade routes and some examples of choking points for trade or very strategic points for trade. If any of them come under attack, you can try and correlate to what kind of disruptions will happen in the world trade. This can lead to specific commodity prices and stock prices soaring up or down and help you take decisions before other people. For example, Turkey has a lot of soda ash capacity, they build a lot of glasses. If Turkey has a problem, then you know what will get impacted. Now, while trade wars are going on, can we try and make a little money? What happens to most retail people who are investors or traders is they buy low and sell higher. And typically, these trade wars or physical wars like the bombings, they bring markets down and stocks crash. We might see a decimation on Monday also in certain geographies, including India. First of all, when it comes to investment or trades, see, investors, like I said, they buy, they hold, and they sell. This whole duration could be few weeks, months, or years. But eventually, you make money when you sell higher only. Traders could buy and sell, or they could sell and buy. Most retail don't know how to sell and buy at all. And if you want a video around it, let me know, because this is something I am trying a lot these days to sell and buy also, so that I can try and make money in both types of markets. The reason I highlighted these points is for retail, since this particular weapon is missing, they are really stuck when the markets are down. See, in the last 1 year, if you see Nifty has literally gone nowhere. If you have invested in the largest stock in the country, Reliance, your wealth has probably reduced in the last 1 year. But in the same time, if you see BSC in the last 1 year, it has given 2.5x kind of return. Most investors are not clear when they get into investment what is their goal, how much money would they want to make, when would they exit, and so on. Most traders are not pre-decided upon the percentage profit, 2%, 5%, 10%. They are profitable, then they go into greed mode. This will go up more or go down more, and they don't book profits, and then the direction changes. Either they let go of a lot of profit or they end up in a loss. Ask most investors what is the trigger for their investment price to go up. Most people would not be very clear. Time frame, trigger points, decisions. Similarly, trader, trend. What is deciding the trend for the underlying? For example, after what happened in Iran today, you might see, say, oil prices or maybe gas prices go up tomorrow. But again, these prices would have already gone up by the time MCX open at 9 a.m. What do? The gap up will be, say, 1%. Gold may be down 1%, 2%. But you will not get a chance to buy or sell. What is government's theme for the year? A lot of direction comes in the budget. For example, government right now is in no mood to invest a lot of government money in thermal power, especially coal. Do you want to put your money in a long-term investment aligned with coal at this point? You might make money. I'm not saying no. However, I got out of coal when I understood that government is putting most money in solar only. Now solar is becoming a commodity. Will you make money there? I don't know. What is your own profile, your age profile, your risk profile? How much money you have already made? What are your goals in life? Most people in investor age, say around 20, 25, 30, don't have enough money, and they are trying to make money via trading. Most people in their midlife, they are turning investors and trying to compound money when the time for compounding 2 decades is already gone. It's a confused word. Now let's talk about some alternates to stock markets. The first one is gold. A big one, especially in uncertain times. Usually gold goes up. I've been talking about gold since 54,000 levels in India, which means gold has nearly doubled since the time I started talking about gold, about 1.5 years back. And I've been long for most of the time in this duration. Today also I'm long on gold. Similarly, you have silver. Silver not necessarily a hedge against uncertainty, but it's an industrial commodity. Right now, silver is probably going up more than gold. Now, no one can comment upon the eventual trends in next 1 year or so. Then you have crude. Crude is very volatile. Mr. Trump is trying to keep crude low, but the uncertainty in Middle East may take crude up for now. Similarly, you have natural gas. Remember Kuwait, Qatar, other location I just mentioned, they are specializing in natural gas. One more thing is currency. In general, rupee is depreciating and IT companies want rupee to depreciate its extra money. So they have stopped now hedging a lot. But currency is something that fluctuates a lot. The dollar index has gone crazy since Mr. Trump came in. The final one in my list right now for today is Bitcoin. Bitcoin has been crazily going up and down, probably between 80,000 to 110,000. This is a wide range for an asset in the top 5 list in terms of market cap. And it falls and rises about 5 to 6% in every week right now. The reason I call out these alternates is as an investor, as a trader, you can trade in all of them. Gold, silver, natural gas, and crude, even currency, you can use MCX kind of exchanges. As a retail investor, yes, you are allowed to do it. It's mostly trading. You could also take longer positions for 3 months, 4 months, call it an investment if you want to. Bitcoin is legal in India if you do it the way government wants you to do it, including the tax filing and so on. Most of these are traded via futures, so you can also first sell and then later on when the commodity falls, for example, you buy. The third one is ETFs. A lot of people would want to do gold and silver, for example, but they don't want to get into, say, futures and options or commodities. You could use gold ETFs or you could use silver ETFs. I mostly invest in gold and silver via these ETFs only. These are very close to their all-time highs. If you see the distances, 2, 4, 4% and so on, both gold and silver are near all-time highs. Now, in addition to the point 2 I talked about, in general, I want to talk about futures. I don't understand options, so I don't talk about options much. But I use futures in stocks, indices, commodities. I don't do forex, but you could do that. Together, these allow me to buy, sell, buy all these, especially the option of leverage at times when I need it, especially when there is a very strong conviction. Hedging through them is useful. For example, if you are taking a very strong bet in Nifty, what would happen if Nifty falls? So you could maybe hedge it via, say, gold. Note that stop losses are useless here because there are times in the day when the commodity future would open 1% gap up or 1.5% gap down. Your stop losses would be pack of cards. Leverages are at play 1 is to 5, 1 is to 10. So while your profit grows up suddenly, your losses also can grow very rapidly. You can lose more money than you have invested. These are not meant for people who are weak at heart or who can't bear losses. You could suddenly end up with lot bigger losses that you have ever seen in stock markets, in stocks and in indices. Never use futures or in fact options for critical money, for example, for your education, etc. My benchmark is in a trade, you can't lose more than 1% of your wealth. The last one is if you are defensive for whatsoever reason, and there is nothing wrong with being defensive. FDs don't give too much interest. You could take moderate risk with bonds. There are bonds which are AAA rated, there are bonds which are BD rated, BB rated, and so on. There are NBFC bonds. Typically, these give anywhere between 9 to 12% return. Higher yield than FD. They are riskier than FD. They are not backed by RBI, but remember that RBI also backs only about 5 lakh of your FDs. Usually come with cash flow, which means every month, every quarter, you are getting a part of your interest as cash flow. You might be getting principal back, say, every quarter, every 6 months, every 1 year, which means your risk also goes down over time. Most of the NBFCs are backed by B2C loans, which means they are individual loans. So, for example, a Bajaj Finance, which is an NBFC, or a microfinance company, they are giving a loan to an individual. If that individual default, then that is one individual among, say, 1 lakh or 1 crore customers. So that is why bonds, while the risk is higher than FD, they may be an instrument in between your FDs kind of instrument and your equity or commodities kind of instrument, especially if that is not something that you want to handle. These examples were not trading recommendations, but guides to your future trades on how you could measure uncertainty and what lies ahead. Thanks for watching, and I will see you next time.